You drove my kids drunk? I will kill you for you. Oh, that's gonna cost you. Worth it.
Let's talk about finance lessons from the 7th episode of Billions based on my work experience at Goldman Sachs in New York City and based on my work experience at the top hedge funds in the world. Now, please be sure to comment, like, and subscribe, and stick around because at the end of this video, I'm going to grade the episode for Wall Street realism with a buy, hold, or sell rating. 3 key topics in this episode that we will discuss are: number 1, how Axe Capital and you might deal with a public relations crisis. Now, Axe hit somebody at a Hamptons house. And what we're also going to do is we're going to look at examples of which houses billionaire hedge fund managers owned in the Hamptons. The second topic is employees wearing a wire to catch Axe with insider information on a biotech stock, and why investing in biotechs is risky, and how you should invest in biotechs. Topic 3 is an Axe employee meets with a headhunter, and what should you do if you get a call from a headhunter? Topic 1. In this episode, Axe punches somebody, which was recorded, and he has to deal with a public relations disaster, and he could even be arrested and face jail time. And investors hate it when there is any publicity that distracts money managers from making money, as we can see from this investor meeting.
You hit some guy and knocked him out, but if people think you're feeling the pressure, acting out, hitting folks for sake, they will run for the exits. Banks will even look at you as a shaky investment.
Accurate. Any distraction means investors run for the exit. Now, when I worked in the hedge fund industry, if a billionaire CEO bought a sports team, we might look to short the stock as the founder gets distracted. And the same thing happened with Elon Musk when he bought Twitter. It was such a distraction, and many investors sold Tesla. So how does Axe Capital deal with this public relations disaster?
What I need right now is to find that original video, find it, pay what we need, get it.
Axe has his investor relations executive fix the issue. Now, large hedge funds have investor relations departments, but they're not experts in public relations. So what they do is they outsource this to public relations firms. And if there's anything negative about you posted on the internet, then these public relation firms can partner with firms like these here to remove or de-emphasize online content from a search engine optimization perspective. But hedge funds take it to the extreme. For example, billionaire hedge fund manager Paul Tudor Jones found out years ago that a documentary was made on him and his firm, and he tried to buy all the copies of the documentary, which only made the crisis worse for him. So what do public relation firms recommend doing when there's a crisis? They recommend getting ahead of the story, which is what Axe did when he bribed people to get the entire video, which shows the clip of the dude he punched admitting that he was drinking and driving Axe's kids. And as Don Draper once said, if you don't like what's being said, change the conversation. And Axe was able to get the video clip showing this dude admitting to drinking and driving.
You drove my kids drunk? Whoa, man, I had a beer or two.
Now, this episode was filmed in the Hamptons, where billionaire hedge fund owners own their vacation homes. Let's check some of them out. Here we have Central Park, and many billionaires take a 40-minute helicopter ride from right here in New York City to this Southampton's heliport. Then here in the Hamptons, we have Meadow Lane, which is where many hedge fund billionaires have houses. And here are a couple of examples of their summer homes. Right here we have hedge fund billionaire Dan Ock's house. And here's Chase Coleman's house from hedge fund Tiger Global. And right here we see Bobby Axelrod's Hamptons house, which is owned by businessman Michael Loeb. Let's now move on to topic 2 of 3. Now, in the previous episode, District Attorney Chuck Rhodes tried to get Dollar Bill to cooperate and turn on his boss, Bobby Axelrod, which did not work.
Cars are so
Dollar Bill did not flip. So the government now goes after Axe Capital portfolio manager Donnie Kahn. Why? Because of this.
Get started with 200,000 shares of Rubinex.
So the issue here is that Bobby told Donnie to buy a massive position in biotech company Rubinex, but he did not say why. Then after Donnie bought Rubinex, as you can see right here, the stock increased a couple of 100% because the FDA, meaning Food and Drug Administration, approved one of the products. And the government investigated Donnie because of this.
He couldn't provide the research on the trade. He had no sign-offs from compliance. He didn't have a dig. And our tech guys were able to pull metadata that established he'd been in contact with insiders.
So Axe Capital made at least $4 million in the trade. And since hedge funds keep 20% of this, then this means that Axe Capital made $800,000 on this trade, and Donnie likely took home $400,000 or half of the profits on the insider information as the FDA approved a Rubinex product. And the move in the biotech stock is parabolic. And this is somewhat realistic because often biotech stocks have a binary event where the FDA decides to approve or not approve a product. And larger cap biotech stocks can easily get cut in half as well or go up materially, which is what we saw with Biogen, ticker BIIB, which dropped about 50% in February of 2005. And biotechs are deadly to invest in, which is why many investors that want biotech exposure just buy biotech ETFs, which is what I recommend doing. And the top biotech portfolio managers on Wall Street usually buy a basket of speculative, liquid, smaller cap biotech stocks in what's called a pray and spray investment thesis, hoping that one stock in the basket goes up materially. Now, the government makes Donnie wear a wire to try to get Bobby arrested.
We need him to do a deal with you directly, and when he does, we need you to confirm the source of the information, that it's insider.
Well, that's going to be hard to get him to do.
Now, Bobby clearly had insider information on Rubinex, and Donnie is now wired and tries to get Axelrod to admit that he has insider information on another trade.
Sorry to bother. I want to know if you think I should be ready to pull the trigger at the open tomorrow.
Wait,
But you said,
I'm not certain.
Now, Bobby is smart enough to know that Donnie is likely wearing a wire, especially since Donnie visit Axe's house late at night, which would never happen. And notice how Bobby said we. He gets others to pull the trigger and commit the crimes so that he is insulated. And Axe is always really cautious in all meetings, as he knows that the government is trying to nail him. Just like how this other former employee was wearing a wire in this scene, and Bobby knew it.
I have some ideas, and I'd love to share them.
Now, the government keeps coming after Axe, and they can't get him. But as Warren Buffett once said, if you investigate somebody long enough, you will find dirt.
I think you're going to be happy.
Topic 3. In this episode, Axe's on-site psychiatrist, Wendy Rhodes, wants to leave Axe Capital, and she has this meeting with a headhunter.
Depending on what you want, I can get on the phone and bring you a dozen offers by 5 p.m.
Can we? Let's slow this down. I need to be discreet.
Not accurate. Headhunters are never this good. Now, if a headhunter contacts you, should you meet with them? Absolutely. But make sure that if you meet with them, meet in a discreet place and never use your corporate cell phone. In fact, if your company gives you a corporate cell phone, if you can, buy the exact same model that never connects to corporate Wi-Fi and communicate with headhunters using your Gmail or LinkedIn profile on your personal cell phone only. Why? Well, the company could see the email log and have an excuse to maybe let you go. What about loyalty, though? Well, you're loyal to your family first and the company second. Worth it.
No hedge funds. Nothing in finance. I can't work for a competitor. That would feel wrong.
So Wendy is sort of loyal. Now, the problem with wanting to leave the hedge fund industry is this.
Well, that limits us. What's more important to you, the comp or the work itself?
Accurate. It's really hard to leave the hedge fund industry, as they pay better than any other industry. And this is why it's crucial to always live below your means if you work in finance, because golden handcuffs can stop you from leaving. Let's talk about grading of this episode with a buy, hold, or sell rating from a Wall Street realism perspective. Now, the fact that one of Bobby's employees comes to his house late at night to try to get insider information is not accurate at all. They would likely wear a wire to nail him at work or at a restaurant or even on a walk in Central Park like what we saw in the movie Wall Street. However, the episode did a superb job at showing how hard it is to leave a job in finance, and also the binary nature of biotech stocks exploding to the upside, for example, on FDA approval. As a result, I'm going to give this episode a buy rating. Please like, comment, and subscribe, and I will see you soon in our next reaction video when we react to episode 8. Thank you.